Aloha friends, welcome to my YouTube channel, The Business Finance Coach. Amanda here, and in today's video, I'm going to go through 4 steps to get all of the secret tax write-offs for your self-employed or LLC business. And in going through these 4 steps, I'm also going to dispel a lot of myths that I see that have really caused people to feel like they're missing out on tax write-offs, like there's savings you should be getting that you're not getting. I really see this mentality towards business taxes where the taxes are really overwhelming, confusing, and we can have a lot of avoidance towards them, and it all ultimately kind of stems from this place of unknowing and that there are things we're missing out on. And as I go through these 4 steps and dispel these myths, I'm really going to explain what to focus on to get all of the tax write-offs you deserve, including the secret ones. We only have so much time and energy, and when we're self-employed, we're doing everything. So in being able to streamline what you focus on, and what you really do need to focus on to actually get all the tax write-offs is the same thing you need to grow your business. So really understanding what I'm gonna talk about in this video can help you really avoid wasting time, energy, and even money with professionals when it comes to your taxes. All right, so step number 1 is to actually understand what a business tax write-off is. A business tax write-off is any of your business expenses, the things you spend money on in your business in order to earn money, are tax write-offs. These don't need to be like things you have to spend. It can be the choice in how you choose to run your business. You could have a high-end service, right? And you could spend money on all sorts of things you don't have to spend money on, but it's part of your business model. Well, all of those expenses are tax write-offs. So it really doesn't need to be as complicated as it seems at all. And the truth is, there are no secret tax write-offs. While tax write-offs can be complicated to calculate, some of them, the DIY tax software or your tax professional, they take care of that for you, the actual calculation. But for most of them, it's very straightforward. It's your business expenses, and you have to tell the tax person or the tax software what your business expenses are, the total amounts. You have to know those amounts. So a lot of people will say to me after I explain this, they'll say, well, what about this specific situation? Is this a write-off? So to give you a rule of thumb, if you have a question about something, is it a tax write-off? Ask yourself, would I have spent the money on this if not for my business, my work? If the answer to that is no, I wouldn't have spent this money, but because of my business, then it's a tax write-off, plain and simple. Everything related to your work is a tax write-off. And honestly, the majority of them by far are just that simple. Keep track of all of your expenses. Those are the write-offs. There's honestly no secrets. But I see people spending a lot of money and time, like trying to find, have people look over their expenses to see if they're missing anything. Like, there's nothing you're missing. And while I help people with tax planning, and it's a great thing to understand, this is the focus, especially until you get your business above like 100,000 or at least 100,000 in revenue. There's really no need to get into the more complex side of things, like the S Corp. I see a lot of people get sold on the S Corp. I had a lawyer say to me, when she was doing my LLC, do you want me to form an S Corp? And I said, well, why do you think I should do that? And she said, well, you would know more than me. And I said, yeah, and I only know reasons why I would not do that. I was just getting started. At the time, I had about 10,000 in clients. I was like, why would I do that? It's going to cost me way more. The S Corp itself on the tax return can save you a little bit of money, but there's so many other expenses that go along with it. So many, in fact, that I will have to do a separate video addressing the S Corp, and I'm not going to talk about that anymore. So the other type of myth that goes along with step one in understanding, what tax write-offs are, is that sometimes people will say, oh, well, I'll buy it because I can write it off. And they'll literally spend more money because they feel like that's somehow free money. It's not. All you're saving is whatever your effective tax bracket is, your effective tax rate is. And another myth is that we pay tax bracket rates that you hear of, that, based on your income, there's a tax bracket you fall in for taxes. Well, you don't pay that rate. You pay less because you pay your effective tax rate, which is your total taxes divided by your total income. So it's very common for this amount to be, it could be like 12.2% or 20%. But it's always going to be less than your tax bracket rate because when you do your self-employed taxes with your personal taxes, everyone gets a personal exemption of $4,050. And then if you have dependents, you take their personal exemption for them. And then everyone gets the standard deduction of $6,300 per person. So that right there is about $11,000 that you decrease your income. And then, of course, there's a bunch of other write-offs that can be a little more complicated and less common. But so those are the two myths to know. You are only saving your effective tax rate. So often I see people at 19% effective tax rate. So that's the amount you're saving in taxes when you deduct your write-off. So if a write-off costs you $100, $100 times 19% is $19. So you're saving $19 of taxes by deducting that from your income. And it's not a straight comparison. Depending on how much money you make, it flows into your personal. So when you report your taxes as a self-employed person, you report all of your income, then you deduct all of your business expenses, tax write-offs, same term, and the net amount flows to your income on your personal tax return. All right. So that's step one, just understanding it all, clearing up the myths,